Hello, YouTube. It's your boy, the Crazy Trader, and I'm here again with your favorite stock review. Like I always say, it's get money, don't make no money, and you always gotta risk it to get the biscuit. As you know, I'm not a professional financial advisor, so don't take my word for it. Do your own due diligence. This video is just for educational and informational purposes only. Today, I'm gonna talk about Robinhood again. There's a reason why I keep talking about this stock day in and day out because I feel like it has kind of bottomed for now. But I'll show you a little bit of what I see and what I think is going to happen eventually. My portfolio, sideways as always. I told you I'm heavily diversified now because once I crossed the 100 gram mark, I'm very heavily diversified in my portfolio. So my portfolio won't do much unless a certain like a stock like Robinhood drops to like $35. Yes, and that's when it's going to affect my portfolio in a way. But even with that, when it does, I'm going to buy a load of it, a load of Robinhood shares just so I can have it because I love the company so much. The only thing that is going to stop me from buying Robinhood is maybe there's a war and the company blows up or something. But for now, the company is a solid company, and I think I'm gonna keep holding on to it. I'm holding on to my 10 shares of Palantir. I don't know when I'm gonna sell it. I love this stock. The Palantir has made me so much money. I can say Palantir made me about 40 grand, easy. So I really love the company. I think it's going to do great. But like I said, I bought it at 7, 8, 9, $10. So it's really insane for me to still be holding it at 150 and $200. So I sold. I took some profits, obviously, and I redistributed them into some of the stable stocks that I have. So that's what happened with Palantir. If it goes down more, I might buy some more. But for now, I've sold most of it, and I'm just left with 10 shares. Robinhood, 261 shares. You know, my goal is to get 500 shares. I personally would love for it to, just swing sideways all the way till I get my 500 shares. But I don't think that is going to happen because I haven't bought. I just buy $20 every day. It's right here. This is my daily buy every day, $20 every day, and I don't think that is going to have me buy 500 shares in a year. So I I want to believe that it's not going to do that for a while. So I'll show you something. Look at this past 1 month, the past 1 month for Robinhood. Look at it. Look at the stock. What it's done. It's gone sideways for the past 1 month, all sideways, consolidating. So there's a lot of consolidation for the past in the 70s, as you can see. Goes up 77, comes down 71, stays, goes up 77, swings all the way down 71, goes up 78. It's been consolidating and slightly going higher, higher lows, lower highs, whatever you guys call it, slightly going into the side. But the consolidation, you can see the consolidation where it's going slightly sideways all month long. I'll show you something from the 3 month where you could see the drop. Look at the drop all the way in the 3 months, and then the consolidation starts from this side, right? February 5th all the way for a whole month. So it's been consolidating for a whole month. And I want to believe that from here we see a spike because you can see it's slightly going up and up and up. Um, 71s are not the bottoms anymore. Look at 75, 76, 77. So 71s are not the bottoms anymore. So the consolidation is here and it's slightly going, closing at a higher high every day, slightly. So like I said, I personally, I'm gonna keep buying, even though it's 18% of my portfolio, which I don't really like that way. But at the end of the day, I believe in the company and I think it's gonna do great. I personally think it's a $200 stock, so I'm gonna hold on to it until it gets to 200, and I'm gonna start selling. I'm gonna start taking profits. Okay. Like you can see, my average cost is 32. So if it gets to 200 and I don't sell, that makes me pretty stupid, So I'm gonna sell some and take some profit. If I get my 500 before it gets to 200, fine. If I don't get my 500 before it gets to 200, I am still going to take some profit. I like taking profits and redistributing them. That is the only way that I get to hold on to my investments. So I take the risk, and then when the profit comes in, I take the profits and redistribute them. I would like you to go to NASDAQ.com, and you don't even have to go to NASDAQ.com. These articles are right in Robinhood, so you can read them out of Robinhood. And it says, "Did Robinhood just change investing forever?" I just read it. I think it's a great article. I want you to go and read it. There are two articles that I'm going to show you, and I would show you the key points: new trust and custodial accounts, because yeah, Robinhood brought up some new features to their platform, which is new trust and custodial accounts allows family to manage and transfer assets seamlessly within the app. So that is part of the platform now. The Platinum card, it targets affluent clients with luxury travel benefits and high credit limits. I have spoken a little bit about the Platinum card, not really into detail because there's so much information online right now. But the Platinum card, the fundamental of it is to for it to target affluent clients, because now it's only a lot of their customers, or a lot of the people who are on Robinhood, are retail traders, people like you and me, people like the average Joes, right? They're trying to target the affluent clients so they can actually transfer their assets from places like Charles Schwab and all places onto the Robinhood platform. And I think some people would do it. They will get some people. They will not get other people. But for sure, for now, they will get a lot of people. Um, the next point is Robinhood is trying to become the financial super app for investors and traders, which I've always spoken about, that they are a financial super app. It's not like they're trying to become, they already are. It's a bank, it's a crypto platform, it's a options platform, it's a gambling platform. Some people don't like that, but it is a platform that it's part of the platform. You can turn it off if you want, if you don't want it, but it is part of it. So it's a financial super app, whether you like it or not. I don't know why they are saying it's trying to become. No, it is. Um, there's another article that is also on the Robinhood page. So where could Robinhood be in 3 years? And it's also another amazing article that you can actually read, and it will give you some amazing points. I Because of lack of time, I don't want to go through all of it. I want you to actually do some a little bit of, don't be lazy when it comes to picking a stock and throwing money at risk. If you are going to take the risk, then you have to research it just a little bit. A little research will do you amazing, especially in the age of AI and LLMs, that are actually summarizing everything that you need about a stock, everything that you need about anything, right? So and this has been provided for you already in the Robinhood app. So all you have to do is just click it and read it. I'll go through the key points, which is revenue mix will define the outcome, which you already know that they have a lot of different revenue mix: revenue from options, from credit card, from banking, from prediction markets, from crypto, just name it. So many sources of revenue. So revenue mix, which they already do have. Demographics offer potential, not certainty, but the demographics offer a lot of potential and certainty too for me. um, the next phase of growth will be judged less by headline revenue spikes, which I do agree, and more by consistency across the market cycle. Yes, they have to be a little consistent when it comes to the market cycle. They can't just spike to 200, and then when the markets kind of goes down, they go down to like 70 something. You don't see that with Google. You don't see that with Meta platforms. Yes, they do drop when the market goes down, but they don't drop 50%, 60%. Google doesn't do that. Amazon won't drop 50, 60% when the market goes down, but Robinhood is doing that because people are scared and because of the uncertainty. So with a few years, they have to be a little consistent with market cycles. When people know that, okay, this stock is consistent, and when the market drops a little, it's not going to drop by 50%, then they are going to actually take it more serious. I take it serious already because I think they are great, and I think it's a good company. I'll read a little bit of this because I wanted to give you a little bit of information about it. I want to know, is it in this article? I want to believe it's in this article, but they actually do tell you, from a transaction engine to a financial platform, where it came from. This article is amazing. Please just go read it. The more probable middle path. They tell you where it's going, the downside risk. They tell you all that. The metrics. It's an amazing article. Whoever drafted this article it's awesome. It's on Nasdaq.com. You can go to Nasdaq.com, go to Robinhood, and you can pull this up. If you go to Robinhood app too, and you hit the Robinhood ticker symbol at the bottom, the news, you will find this article over there too. And I want to read this side of it for you, right? It says time is an advantage for Robinhood. Robinhood's greatest long-term asset remains its demographic. Its user base is younger than those of the most traditional brokers. Yes, most of the people who are on Robinhood are younger people, and we know that there's an asset transfer between from the older people to the younger generation. So if somebody's grandfather is on Charles Schwab and transfers their asset, maybe God forbid dies, and they inherit the money from Charles Schwab, guess where they're going to bring it into? Robinhood, because that's what they know. That's the platform they know. They don't know anything about Charles Schwab. They don't know Bank of America. They know Robinhood. Okay, so time is the raw material of compounding. A 35-year-old investor today may remain financially active for decades, which is true. If you're 35, you're going to be remain financially, you're going to remain a financial active investor for the next maybe 30 years. So over that span, financial needs evolve from trading to saving, from saving to lending, from asset accumulation to wealth management. If Robinhood retains and deepens those relationships, lifetime value increases dramatically. If engagement fades when markets are quiet, the demographic edge loses its power. The next 3 years will reveal whether the company can evolve alongside its users. And so far, it's done amazing with that, with engaging with its users, engaging with the market, engaging. It's done so well. And if what the way it evolves and the way it pushes out product, it is pushing out so much product that Wall Street can't even keep up. You can see almost every month there's a product that is pushing. So I love the idea and the innovation of this company, and I think they are going to do so amazing. People haven't seen what others are seeing and what I am seeing. I believe this company is going to do so well. Um, it's my number one stock pick as of now. It's my number one stock pick as of now. And the fundamentals are also pretty good. PE ratio 38, market cap 70 billion. So many things that I know. 52-week high was 153. I think it will blow past this after it settles down for when it has its stability, or after all this sideways trading, it would actually really settle down, and this thing is going to blow past 153. It's a $200 stocks, and I'm going to stick to it. And I'm going to sell some at 200. So when I start selling at 200, I don't want to hear you yelling. Okay. So, not to waste too much of your time, I want to say stay blessed and have a good day. Okay. But I want you to go and read the articles. Please read the articles. All right. Stay blessed, stay safe, and peace.